Student loans, two words that often bring stress to millions of people. For many, student loans are the key to achieving their dreams of higher education. But managing this debt can feel overwhelming, especially when payments pile up and interest accrues faster than you can keep up. The good news is, with the right strategies and mindset, you can take control of your student loans and manage your debt effectively. Whether you're just starting your repayment journey, struggling to stay on top of payments, or looking for ways to pay off your loans faster, this video is for you. We'll cover 7 essential tips to help you handle student loans like a pro. Stick around until the end because tip 1 is a powerful strategy that could save you thousands of dollars in the long run. Let's jump right in. Number 7. Understand your loans inside out. The first step to managing your student loans is understanding exactly what you're dealing with. Many people don't realize how much they owe, what their interest rates are, or the terms of their repayment plans. Take the time to get familiar with the details of your loans. Start by making a list of all your loans. Note the type of loan, federal or private, the total balance, the interest rate, and the loan servicer. Federal loans typically come with more flexible repayment options and forgiveness programs, while private loans often have stricter terms. Log into the National Student Loan Data System or your private loan account to review the specifics of your debt. If you have multiple loans, consider using a tracking app or spreadsheet to keep everything organized. The more you understand about your loans, the better equipped you'll be to manage them effectively. Number 6. Choose the right repayment plan. Choosing the right repayment plan for your student loans is one of the most important decisions you'll make in managing your debt. The repayment plan you select determines how much you'll pay each month and how long it will take to pay off your loans. Federal student loans offer several options to fit different financial situations. For example, the standard repayment plan has fixed monthly payments spread over 10 years, which can help you pay off your loans quickly but might require higher monthly payments. If your budget is tight, the graduated repayment plan starts with lower payments that gradually increase every 2 years. For those who need even more flexibility, income-driven repayment plans can be a great choice. These plans base your monthly payment on your income and family size, which can significantly lower your payment if you're earning less. Plus, after 20 to 25 years of consistent payments, any remaining loan balance might be forgiven. If you have private loans, repayment options may be less flexible, but some lenders offer hardship plans or temporary payment reductions. The key is to assess your financial situation and pick a plan that works for your income and long-term goals. If you're unsure which plan is right for you, reach out to your loan servicer who can help guide you through the options and ensure you're set up for success. Remember, the right plan can make your debt more manageable and reduce stress in the long run. Number 5. Pay more than the minimum. If you want to get out of debt faster and save money on interest, paying more than the minimum amount due is a game changer. Even an extra $50 or $100 a month can make a significant difference over time. Start by targeting the loans with the highest interest rates, often referred to as the avalanche method. By paying off these high-interest loans first, you'll save the most money in the long run. Alternatively, you can use the snowball method, where you focus on paying off the smallest loans first for a psychological boost. Whenever you make an extra payment, be sure to specify that it should go toward the principal balance, not future interest. This reduces the overall amount of interest you'll pay and speeds up the repayment process. Number 4. Explore forgiveness and assistance programs. Exploring forgiveness and assistance programs can significantly reduce your student loan burden and, in some cases, eliminate it entirely. These programs are designed to help borrowers in specific professions or circumstances manage their debt. For instance, public service loan forgiveness is a popular option for those working in public service jobs, such as government agencies or nonprofit organizations. Under PSLF, after making 120 qualifying monthly payments while working full-time in a qualifying job, the remaining loan balance is forgiven. Another option is the Teacher Loan Forgiveness Program, which provides up to $17,500 in loan forgiveness for teachers who work in low-income schools or teach certain high-demand subjects. Additionally, many states have their own forgiveness programs tailored for professionals in fields like healthcare or social work, especially those willing to work in underserved areas. For those with federal loans, income-driven repayment plans can also lead to forgiveness after 20 to 25 years of payments. Though this takes longer, it can be a valuable option for borrowers with high debt and lower income. If you have private loans, forgiveness programs may not be available, but you can still look into employer-sponsored repayment assistance. Some companies now offer student loan repayment benefits as part of their employee perks. Taking advantage of forgiveness or assistance programs requires research and careful documentation, but the potential savings make it worth the effort. Check with your employer, state, or loan servicer to see what programs you qualify for. It could save you thousands of dollars and bring you closer to financial freedom. Number 3. Avoid default at all costs. Defaulting on your student loans can have severe consequences, including damage to your credit score, wage garnishment, and loss of eligibility for future financial aid. If you're struggling to make payments, it's crucial to act quickly to avoid default. For federal loans, consider applying for a deferment or forbearance. These options temporarily pause your payments without putting you into default. Keep in mind, however, that interest may still accrue during this time. If you have private loans, contact your lender as soon as possible to discuss alternative arrangements. Many lenders have hardship programs or can temporarily lower your payments to help you stay on track. The key is communication. Ignoring the problem will only make it worse, so reach out to your loan servicer for help if you're struggling. Number 2. Budget and cut expenses. A well-planned budget is one of the most powerful tools for managing your student loans. Start by tracking your income and expenses to understand where your money is going. Then look for areas where you can cut back and redirect those funds toward your loans. Some common ways to save include canceling unused subscriptions, streaming services, gym memberships, or magazine subscriptions you no longer use. Cooking at home. Eating out less frequently can save hundreds of dollars each month. Switching to a more affordable phone plan. Many providers offer budget-friendly options. Shopping smart. Use coupons, buy in bulk, and take advantage of sales to save on essentials. Every dollar you save is a dollar that can go toward paying down your debt faster. Consider setting up a debt snowball or debt avalanche fund in your budget to allocate these savings directly to your loans. Number 1. Build an emergency fund. Managing student loans is much easier when you have a financial safety net. An emergency fund helps you cover unexpected expenses, like car repairs or medical bills, without derailing your loan payments. Aim to save at least 3-6 months' worth of essential living expenses. If that feels overwhelming, start with a smaller goal like $1,000 and build from there. Having an emergency fund reduces stress and ensures that you won't need to rely on credit cards or skip loan payments when life throws you a curveball. Start small, save consistently, and watch your fund grow over time. Managing student loans can be challenging, but with these 7 tips, you can take control of your debt and work toward financial freedom. Start by understanding your loans, choosing the right repayment plan, and making extra payments whenever possible. Explore forgiveness programs, avoid default, and stick to a budget to stay on track. And don't forget to build an emergency fund to protect yourself from unexpected expenses. Now we want to hear from you. What strategies have you used to manage your student loans? Are there specific challenges you're facing? Share your thoughts in the comments below, and let's help each other navigate this journey. If you found this video helpful, please like, subscribe, and share it with anyone who might benefit from these tips. Remember, you're not alone in this. Together, we can tackle student loans and move toward a brighter financial future. Thanks for watching, and see you in the next video.